I've been asked by many of you to record a video on trend lines. They're pretty simple because, of course, they're just straight lines which join up price points. I use them initially for trend identification along with other tools, and I'm going to go into that in other videos. A few years ago, I did a series of videos. I called them Technical Tuesdays, where I covered these sort of aspects, and I think I really need to update that now. Do make sure that you're subscribed and doing the notification bell so you get all these free educational videos as soon as they come out. I'm going to start here with the flag patterns, because these are where trend lines come in extremely useful, identifying a flag pattern. Now, I think that this is probably a New Zealand dollar bear flag pattern. We definitely have a channel. Start drawing the trend line by joining two consecutive points. So I'm going to start with the upper trend line. I've joined two consecutive peaks. I get this rising trend line. And as you can see, the third time the trend line was tested, it did work beautifully as a sell level. 200-hour moving average, just above that as well. So if you were going to structure a trade here, you could say, I'm going to sell the New Zealand versus the US dollar at the trend line with a stop just above the 200-hour moving average. A very simple setup. Or you could even give yourself a little bit more room and put it above the 50% fib. Either way, the risk is pretty small, as you can see, because if you had run the trade to its potential target, which was the lower trend line, and the 100-hour moving average, the blue line, you would have bagged about 70 pips, and you're really risking no more than 20 pips on that trade, even if your stop is above that 50% fib. If it's above the 200-hour moving average, I think you're looking at a 15 pip stop. So the risk versus the reward on that trade is phenomenal. Very simple setup. Trading a channel, trading the trend lines, and of course you could even be trying a long position down here at the blue 100-hour moving average and the lower trend line to see if we continue to trade within this channel. Again, the stop could be as little as 15 pips. And if the trade works, we could be certainly looking at 50 pip profit, maybe more. We could even be getting up to 64.00, the upper trend line, and you would have a potential 80 pip profit on that trade for risking 15 or 20 pips. So these channels can work really well, certainly as far as a risk versus reward ratio. These trades are worth doing. If we were to break below the trend line, if let's say we broke below 63.15, that would indicate that the bear flag pattern has been completed and that we should see a significant move to the downside. So you need to be flexible. You need to say, right, trend line's been broken. I'm in a long position. I'm out of that. I'm going to reverse into a short position, and I'm going to hopefully see this breakout lead to a significant move to the downside. So you've got to be flexible, but just trading that kind of channel alone does offer some really decent low risk trade opportunities. The same thing here in the Aussie dollar. I picked the top of this green candle with the long upper wick. I like to put my trend lines at the top of candles with long upper wicks because it does indicate that the sellers came in quite aggressively at that point. Now, having joined the second peak here 2 days later, we then had a sell opportunity on the 8th of February, the next day. Beautiful. Came right down to the lower trend line. And again, the following day on the 9th, we had another great sell opportunity. We had the red 200, the green 500-hour moving averages combined in the same area as that upper trend line. You didn't have to wait long. In an afternoon, you were bagging 70 pips profit on that trade for risking 20 pips maximum. If you had bought at the lower trend line the second time around, you'd have done well on the rally up. This is textbook. These are just the markets that I trade. These are just the signals that I put out every day. And this is just one of the strategies that would convince me to put these signals on my trade sheet for my subscribers. This is an hourly chart of the NASDAQ as you see it through March and April, a clear sideways trend. This for me is untradeable. I can't trade this kind of market when we're up 1 minute, down the next minute. So I just sit and wait. Now, if we were to come up around the 13,250, 13,300 area, I would try a short. 12,950, 12,900 area, I could try a long, but I would be ready to reverse into a short on a break below this very clear channel. So again, you've got to be nimble. You've got to be ready for the breakout. The same kind of thing in gold. Joining these 2 points gives us the upper trend line. Look how well selling a short position at the upper trend line would have worked. And I particularly like this level because it combines with the 38.2% fib and the 23.6% fib, these 2 sets of fib levels that I've got in there. Don't worry, I will do another video on fib levels. If that's something that you want me to do soon, please put it in the comments box and I'll line that up. Not much we can do when the market's just hovering around in the middle of the channel. You've just got to be patient and wait for it to test either of the parameters. I talked about my spreadsheet trade ideas a little while ago. If you're not a subscriber, then you may not be aware of. This is the best part of the service that I offer to my subscribers. So I spend 2 or 3 hours writing analysis, identifying trade levels, stop levels, targets, trends, everything. And I cherry pick what I believe are the best trade opportunities of the day. It's very easy to read. If it's a sell level, stop above. If it's a buy level, stop below price. And then I've got targets for everything. Just wanted you to know that if you're looking for the best signal service on the market. Okay, going back to trend lines, you join 2 consecutive points as I've done here. People ask me, do I put the candle at the top of the body or at the top of the candle? Put it right at the top of the candle. I think you need to encompass all the data, all the prices that have traded. I particularly like it when a candle's got a long upper wick because it shows quite strong rejection. I've got a lower trend line here. We had a false break to the downside. So if you had a long position, you may have been stopped and then the market may have reversed. That's frustrating, but that's just the way it is. You have to take it on the chin and move on to the next trade. As we head towards the apex of the triangle, we can expect a breakout and hopefully, especially for a big triangle like this, which has been forming over a number of months, when we do finally get the breakout, it'll be like a coiled spring released and the market will really rocket in whichever direction it breaks and present a nice trading opportunity. Moving on to the Euro US dollar megaphone pattern, not very common. You can see that although we're trapped in the sideways range, we keep seeing new highs and new lows. Now, when you're in a bull trend, you see consistently newer highs, higher highs and the higher lows. So every time you make a new peak, it's higher than the peak before. Every time you pull back, we bounce above previous low. When you get a broadening pattern like this, you get the higher highs, but you also get the lower lows. This is still a pattern that you can trade because obviously you can still sell at the upper trend line and buy at the lower trend line. When it works, if you can hold on to the position, big moves to the downside. As you move within the trend lines, there are increasingly large moves. So this can be a real beautiful pattern to trade when you spot it. But these are very, very rare. Don't expect to see these every week. This is a rising wedge as opposed to ascending triangle. When you see both of them rising like this, but the lower one rising at a faster rate, that's called a rising wedge. It can be a negative pattern. You can look for a break to the downside. And then when you do get the breakout to the downside, you see a swift move. It could be a really profitable trade if you get on that. Now, at the moment, you can see the upper trend line is holding the price. An ascending triangle would have more of a horizontal upper trend line. I hope all that's been helpful. Please give me your comments, your questions. I will get back to you. I do always answer. And if you've got suggestions for more videos, I do want to hear them. Or if you need me to elaborate more on this and show you some more trend line examples, just let me know.